Hello, my name is Jan Willem, and this is just a little introduction so that you can see how I can help you. My passion is to teach willing people how to take responsibility for their own money. And a lot of people don't know this, but you're always taking responsibility for your own money. Because if you give your money to the experts, there's no experts, but some people think there's experts. I'll share later why there is no experts. But anyway, when you give your money over to them and they lose it, they're not going to give it back to you because they lost it and you signed, you remember? You usually always sign with them and then you can't sue them. So you're actually still responsible for the money. But a lot of times we think when we give our money over to the experts, then it's safer than doing it your own, on your own. Now, sometimes that might be the case, but when you know what you're doing, it's easy. For example, if I want to bake a chocolate cake, it's going to be very difficult the first time. But then after my wife showed me how to do it, and I've done it 3, 4, 5 times, I can show other people how to do that, and it's easy. But the first time it's going to be a challenge. So I can understand that you think if I pay somebody to buy my chocolate cake, that's going to be easier. On the short term, that's going to be true. And if they give you a bad cake, you don't have to pay them. That's obvious. But when it comes to investment, when they don't perform, you still have to pay. And you have to pay their fees and all that stuff. So that's why I help people to take responsibility or accept the fact that they are responsible for their own money. So I'm just going to show you how easy it is. So on condition that you know what you're doing, it's very easy. The first few times it might feel very difficult to do, but in essence it's really easy. So here is how it works. You have your income statement, or sometimes it's also called your profit and loss, and then your balance sheet. So on your balance sheet you have your assets and your liabilities, and then you have your income and your expenses on your income statement. So what happens is that depending on what you do with your income is going to determine if you're going to get rich or get ahead at least. So for example, if you get income and you spend it immediately, then you're going to stay poor because the money is gone. But if you get income and you buy liabilities like a expensive vehicle, then the money is going to go into liabilities. And because, let's say for example, you take a motorbike that's cheaper than a car, then you can have less expenses. So the more expensive the liability, the more expenses, and there your money goes out. That's why the middle class, they look richer, but at the end of the month they are broke. So if you get your income and you buy assets that generate income, for example, you can, if you buy a car, that's like a taxi, or Uber, that you make some kind of income out of the car, then it's not a liability. So an income creating asset, I'm not talking about what your accountant calls, or your bank calls an asset and liability. I'm talking about the income generating asset or expense creating asset, which I don't feel is an asset. That's why I say it's a liability. So it's the same vehicle, but now you make more money than it cost you. So instead of having just expenses, you'll have some extra income. So that asset creates income for you. Then what do you do with your surplus income? You buy more assets that creates income. That and you see that is why the rich get richer and the poor are still poor. So anyway, it's very easy. Then another thing is that you get your workers and you're self-employed, and then your let's say your big business guys like McDonald's, and then investing, not trading, not stock trading or stuff like that, investing. So let me explain the difference. Your workers, they usually want more security, and you can be any one of the four. So if you have more, if you go to the job, then you get the income. But if you don't work, you get no income. And self-employed, that's usually your super person. The dentist is usually self-employed, or a lawyer, or electricians, but and they have workers that work for them. So they are sometimes a sole proprietor too. So the thing with them is that it's very hard for them, because they have to keep the workers happy, they have to keep the government happy, and everybody get paid, and then they get paid. So they basically just own their own work. So on this side, if you don't work, you don't get paid. So if, let's say for example, you charge $20 an hour as a self-employed contractor, or what, electrician, whatever you are, and then instead of going to work, you go play golf, you're not going to get that $20 per hour. So you only get paid on the amount of value that you deliver in that hour. So you're not actually getting paid for the hour, you just for the work that you put into that hour. And then if you're a big business owner like McDonald's or Walmart, that's, you don't have to go open all the Walmarts every morning. You get some investors that invest in your business plan. So anyway, McDonald's, for example, they get income from hamburgers. The franchise guy buy the franchise, so they are is in a sense, because then they own that business, but now they also have to pay rent to them, to McDonald's, and franchise fees. So McDonald's, he doesn't have to go open the shop, he doesn't have to go hire new people. This guy that bought it, he has to do all the work, and or get a manager to do all the work. And so anyway, business owners don't have to go to work, but they still get paid. So he can travel, he can go play golf and still get paid the franchise fee and the rent. Same with the investor. They buy properties or stocks, and they get dividends. So for example, if you have money in the bank and it gives you 5% interest a year, or 10% or whatever, then even if you play golf, you're still going to get that interest. So on that side, you have to work less. It's almost passive. There's not such a thing as passive income, but this is the closest you're going to get to passive income. If you think there's a truly passive income, you'll spend all your time as an S or a W worker, meaning you're going to spend do a lot of research and investigation and time and effort to find out that there is actually no passive income. They rig and stack the cards against you usually. So this is my passion, to teach people how to make the transition from there to here. It usually takes 2 years. If you're a fast learner and you are consistent with that, it can take you longer to do that, because the way a worker thinks is much different than what a self-employed person thinks, and the way that a business owner thinks is even more different than a self-employed person. And an investor, they usually also think differently, but these two are much more similar, and these two are much more similar. So to make the mind shift from this side to that side is a huge mental change that you have to undergo to be successful in this side. So just to summarize, you can be a worker while you're building a business part-time, employee, and then when your business exceeds your employee income, you can fire your boss, or you can be an S and build a B type of business. For example, let's take the McDonald's franchise. You buy a McDonald's franchise and you get a manager. Then you're not an S, then you're a B, because now you don't have to go there, the manager goes there. You just have to go check up on the manager. Is the manager doing his work or her work? And you only have to work with the manager, where S have to do all the hiring and firing and what pamphlets are we going to distribute, the marketing, all that type of stuff. And investing is usually real estate that gives you passive type of income, or stocks that give you dividends. There are some other things that they call investing, but usually that is trading or something else. For example, development. If you're a property developer, some people say they are investing, but actually they are not investing, but that's a different topic. So thank you so much for watching this video. Please remember to like and subscribe if you want more videos like this, and give me some questions that I can answer for you. Thank you so much. Bye bye.